Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So this week we have really outstanding amount of the important information on the fundamental side. I am speaking not even about the non-farm payrolls release, but mostly on the conclusion that have been made on recent non-farm payrolls data. Also the jobs report that in general it shows that job market in the United States is converging between the vacancies and the jobs outstanding. So vacancies are dropping while the job stands at really tight level, shows very low unemployment rate, which means that sooner rather than later we should be ready for expansion. It means that the unemployment should increase as the number of jobs will be contracted probably within the few months. So also a separate question is what's going on in the banking sector right now, especially in Europe, and all this noise around and screams around credit use. It's not occasional effect. So this is well, it has tight relation to the situation in the banking sector, which is actually not the credit use, but also the UBS, Deutsche Bank, and lots of other top banks that have problems with the solvency. And with the coming more tightening from the Fed, the profit margin, interest margin will continue to deteriorate. So it will make direct impact on the performance of the banking sector. Is the first moment. Second moment, it's also rising the expenses, as they will need more money to serve their debt denominated in United States dollars. So I think that is not the final point yet in this story. So although Swiss National Bank was able to calm down investors a bit concerning the credit use, but I think that it's not the over yet. So we will hear more about this, and it's really dangerous a thing that's going on right now around the banking sector. So also in our weekly report we have taken a look about the crisis process in general. We have tried to estimate where we are right now, how long this crisis should last more compared to the process that we see with this recent acceleration. And it's really interesting stuff that we have discussed in our weekly report. Speaking on the technical side, here we do not have lots of events. Actually, currently the major question is whether we still will get extension with this ABCD patch into the upside, or market just directly keep going lower. So if you will take a look at the previous tendency here, you could see that in general harmonic pullback is almost over. So here's market repeats approximately the same depth of the retracement, and from that standpoint it seems that retracement already is done. But formally the trend still stands bullish, so daily trend has not been broken yet, and we theoretically should keep treating this pullback as just retracement of this upward leg, so until trend stands bullish. So it means that everything comes to watching for intraday support areas and to the trend on the daily chart. So to keep chances on the extension, market should hold daily trend bullish. So if if trend somehow will break in the bearish side, it means that probably this is not the retracement of this leg, but this is just continuation of the whole downside action. That's actually what we intend to keep an eye on next week. So on the daily chart, it means that we will be watching for maybe grabber around some support areas. So if we will get it, might be well good assistance to put the bulls to the bullish scenario in general. That gives more confidence that maybe we could get some extension here. While on the lower time frame, so if we take a look at the hourly chart, what we have this ABCD patch, and on Friday we have talked about the OP, an agreement where theoretical market could show reaction. But unfortunately we haven't got the hand shoulders that we talked about, so minor patching had not been formed. And in general, if you read the comments that's coming from the Fed representatives, that is rather hawkish. And currently there's no doubts, despite what the CPI numbers we will get next week, if even it will be very low anyway, this will not change the policy of the Fed until the end of the year. So it means whatever will happen, probably 1.2% rate change we should get. So from that standpoint, well, it's not big difference what will follow on the next week. Performance here around this level looks a bit heavy, so it's not the bullish reaction on the OP. Besides, if you remember here, we've got confidence level first, now this is agreement with the OP, and both of these levels mostly have been broken. So yes, honestly speaking, this market is still calling around the OP, so this level is not broken yet, but in general, overall performance looks not very bullish. So that's why, although theoretically, as I said, we will be watching for a trend and we'll be watching how market responds to the 618 level maybe. And market, of course, has chances to show the reversal and keep going higher. But based on the previous performance, how market responds to the major levels, and what's more important is the comments from the Fed representatives, chances that euro currency suddenly will turn up and start forming the next upside leg, well, I would say that they are really minimal. So this will happen. More probable that we just will get the downside breakout in our direction on euro currency. But our tactics, since its overall bullish context has not been broken yet totally, grabber could be formed on the daily chart. I suppose that we could keep an eye on these patterns, and particularly speaking on the intraday charts, we are watching for clear pattern. So the reaching of the support area is not enough right now. So additionally to reaching of the support and completion of this OP maybe or something, we need the pattern. So as I said, it should be the head and shoulders. Maybe here it will be some different pattern, but we should not take the long position without the reversal patterns, just because, well, chances stands not in favor of the bulls currently, and bulls need to get as best context for trading as they could, which means perfectly appearing, for example, grabber on the daily chart, holding trend on the bullish side. On the lower time frame, this should be bullish reversal pattern around the major support area. So taking it all together could give us the context that is more or less suitable for attempt to take the long position. If we will get nothing of that, so it means that we should be prepared for downside continuation.